Good afternoon and welcome traders. My name is Rachel Dashiell, Head of Technical Research and Strategy for Schwab Center for Financial Research, and your host for this webcast, Trading Price Patterns. Now, this is a class where we build on the basic concepts of technical analysis, and we identify price patterns, we walk through how to trade price patterns, and walk through some trade management as well. Now, I am joined in the chat today by my friend and colleague, Mike Fairborn. He is going to answer any questions that I cannot get to today, so please feel free to chat in your questions, comments, requests in the live chat there. And please give us both a follow on X. He is Mike Fairborn CS. I am Rachel CS. We post tons of charts, market updates, all different things. So give us a follow there. And then if you like this video, please like it, give it a thumbs up, and subscribe to us on Trader Talk Schwab Coaching for more content like this. So today we're going to walk through an example scan of how to identify, narrow down our universe of stocks to identify patterns. So we're going to walk through that today, show you that example scan, share that with you. But before we get started, let's hit some of those important disclosures here. So options carry a high level of risk and are not suitable for all investors. The information that we're going to cover is for general, informational, educational purposes only, should not be considered any type of recommendation or advice. And we are going to use the Paper Money software application. Keep in mind that there are some differences between Paper Money and Live. Now we are going to walk through our agenda. The announcement is come visit us in Orlando this weekend. Friday, Saturday, we are having our trading workshop there. So come see us there. We have a couple other ones, in New York City near the end of the month for advanced option strategies. And then we have a few going into September and October as well. So since we made the announcement, we are going to then dive into the market overview here. We're going to place new example trades, review our past trades, walk through that scan and identifying those price patterns from those trades, and then work through our trade management. So let's pull up thinkorswim and let's hit those markets because there's a lot going on. We've had quite a bit of breakouts here. So just starting with the S&P 500, we can actually see that the S&P was in this range for a couple months, and we just had this breakout. We would call that a breakaway gap here the other day. So with our last trading session or two. So when you have a resistance level and you actually see that price gaps above it, that is a very bullish sign. That is what we call breakaway gap. That indicates the start of a new trend. Now, if we look down at the moving average convergence divergence, so a lot of times when we look at price breakouts, we want to confirm that with our derivative of price, which is that momentum. And so we had that bullish crossover of the MACD line and the signal line showing that a momentum is accelerating to the upside. Those lines also both crossed the zero line, this purple line, which means that we are now back in a bullish momentum regime. So the last week was more of a bearish momentum regime, and things have definitely shifted. So since we're in a trading price patterns class, let's talk through how to measure this move from a range. So if we had this range that existed in the S&P 500, we are going to measure from highs to lows in this range. And you guys can see that's about 344 points there. Okay, now what we're going to do is we're going to squeeze this price axis, and we're going to take this measurement and we're going to apply it, we're going to apply it to the breakout point. I'm going to try that one more time for us. Okay, my mouse got a little funky there. Okay, we're going to click on this and we're going to move it to the breakout point because that's how we take a measured move. Now remember, patterns are not guarantees, but they provide the structure and the guidelines for us to trade them. So since we saw that breakout, we're seeing it's about to be 2 closes above that resistance, now new support. That entire measured move from this range could take us up near 79, 71 or so. Now, keep in mind, we use momentum a lot of the time to confirm what is happening in price. We do have quite a bit of a momentum divergence. So we have that higher low, or I guess that lower high, I should say, that's being generated in momentum here, while the price of the index has moved to new all-time highs. So that could be telling us that, hey, maybe we'll see a little bit of a pause here, maybe a little bit consolidation on these levels, or maybe price even comes back and kind of retests that old level of resistance, now new support. We call that a polarity zone there. So we'll have to see, but I bring out the momentum because we're going to be using that in our scan today. So remember that when we're trading price patterns, we first and foremost want to use the price to give us confirmation. You know, a lot of the times we use percentage filters, we'll use multiple closes above or beyond a resistance or support level. And so we're going to use that today, but we're also going to use momentum as well to confirm, because that gives us even more conviction when it comes to taking a directional position with a pattern breakout. Okay, we're going to look at a couple other ones. Dow Jones Industrial Average. We had quite the breakout here. So we have another breakaway gap here. So as long as this gap right here doesn't get filled within the next 2 tradings or sessions or so, this could tell us that, hey, price could run up to the upside for the next couple weeks here. Again, we're seeing a little bit of a bearish momentum divergence, so could suggest maybe a possible consolidation or a little bit of a pullback to support. But again, we will kind of have to see that. And then within the semiconductor index, you guys, we had this pretty massive head and shoulders topping formation. If we look at this slanted trend line, we had a left shoulder, we had a big head, we had a right shoulder, we had a little bit of a breakdown. We did not stay below that level of support, then new resistance for more than 3 closes. So just within 3 days, that price was reclaimed, and now we may find a little bit of resistance at that right shoulder. We did see that little shift in momentum, so maybe we'll see a little retest of this gap here in the semiconductors. So be on the lookout for that. Okay. So that is a little bit of our market overview. Now let's take a look at what we could, let's just kind of review our past trades here on the ones that we've had in previous weeks. I didn't teach this class last week because I was on vacation, so we didn't get a check-in with these. We're going to leave all of our trades the same. We did get filled on our long trade for NVIDIA last week when we did have a breakout to the upside. If you guys remember, we traded an intraday technical formation on an inverse head and shoulders. So that one played out for us. We did go long shares of NVIDIA. We're actually going to move up the stop because the technical formation actually changed with this one. So we were trading this little technical pattern here. If you guys can see, this was like the left shoulder, this was the head, this was the right shoulder. And then we obviously had that breakout initially fail, but price came back and retested that level of support, really giving us this double bottom that was carved out. So we saw that price went from making lower lows, lower highs, to making same level of highs, same level of lows. That tells us that's our first indication of that shift in the trend. We saw that confirmed by momentum too, because we made a lower low here in price, but momentum gave us a higher low, telling us there was a little bit of a bullish divergence. So that was giving us confirmation of that bottoming process in place. And then we got that fill with that move above. And again, this is another breakaway gap. So similar to what we just saw in the indexes, we're seeing a breakaway gap here of a double bottom. So what we're going to do is we're going to move up our stop and place it right at that gap level of support. Okay, so we're just clicking and dragging up the stop order like you guys can see, and we're going to hit send. Okay. And then what we have is we still have our profit taking level at a perfect level because we measured the depth of this original formation, which at first looked like an inverse head and shoulders, and then that didn't complete and it became a double bottom. So that measurement's going to be about the same. Okay, so that measurement could take us to those all-time highs. So that's what we're going to leave in there. Now, if you're working on playing this breakout as well, you could look at the implied volatility percentile. It's telling us, hey, we have a pretty low IV, so that we could get a little bit of directional, but there is earnings coming up. So keep that in mind. You have that coming up in quite a few weeks. So you may see an influx in implied volatility here. Okay. Well, let's move on to that scan because that's the meat of our discussion. And so what we're going to do is we're going to kind of compile all the different things that we have kind of discussed so far just to narrow down our universe of identifying price patterns. Because I know the question I get a lot in this class is, how do you find the price patterns? What do you start with? Do you start with a scan? Is there certain criteria? And the answer really is, there is no way to truly scan for a price pattern. You cannot say to the scan tab, hey, look for a double bottom here. I mean, there is a feature for that, which is not going to be in the paper money side. You could filter for patterns, but it's not going to give you patterns that are developing now. So that is more of a historical look back for patterns on the scan tab. So what we're going to do is just narrow down our list with some criteria. We're going to look for stocks that have a level of liquidity, stocks that are in a primary uptrend, so are above their 200-day moving average to give us maybe some bullish reversal or bullish breakout patterns. We're also going to look for momentum that's in a bullish regime. So just like we saw on one of our charts here, see how that MACD line, that blue line right there, which is that 12 period EMA minus the 26 period EMA, that's our MACD line. When that shifts above the 0 line, that tells us that we're back into a bullish momentum regime. So bullish momentum regimes tend to favor kind of long trades in that sense, okay? So we're going to look for that. We're also going to look for this MACD crossover. So the MACD line we talked about is the 12 minus the 26 EMA. That is the blue line on the MACD. Now, that kind of yellowish, tannish looking line, that is what we call the signal line. That is taking a 9 period or a 9 day exponential moving average of the MACD. And so that's going to generate different trading signals there for any of those that use the MACD as well. So we're going to look for a bullish MACD crossover within a certain amount of days. And then we're also going to look for a reignition to that bullish momentum regime. And then we're going to piece down to a few different charts and look at the price structure. So let's dive in here. And keep in mind, before we get started, that we're going to use these study filters quite a bit. So if you are in your paper money account, study filters do not work. These study filters only work in the live account. The reason why you're seeing study filters working in my account is because I have a special paper money account. So now I do see a couple links to a survey in the chat. There's only 2 questions in there. It takes about 10 seconds to fill out. If you guys can please take the time to fill out that survey, give me feedback on what you're seeing today and in some of the other classes, maybe what you'd like to see going forward. I love, love, love reading your feedback, the good, the bad, the great, the ugly. I take it all into consideration and try to make this class what you guys want to make the most of it. So what we're going to do, we're starting with these basic filters. We're going to scan in all listed stocks here. So that's just starting with category, all listed stocks. And we're just going to start with stocks that are greater than 20. Give us a nice little minimum there. We're also going to use a study filter for volume, selecting average volume. We're going to look at the 50 period moving average of volume being greater than 1 million shares traded. Because the more liquid the stock, the more liquid the options as well. So, and a lot of times in this class, we do play the options as well. Yeah, and Paul Montgomery, good comment in the chat. You can run both paper money and live at the same time. So if you want to do that, you just right click on that icon on your desktop or on your toolbar or taskbar at the bottom of your screen, launch another instance. You can log into both. Just be aware of the color differences. Live is going to be more blue. Paper money is going to be more brownish, orangish. So do not place a trade in the wrong account. Always read the review screen. So what we're going to do is we are going to add another filter. Okay, so we're going to go to a study filter, and we are going to look for custom here. And so we're just going to use this basic one of looking for stocks that are greater than their 200-day moving average. So you can see that I clicked edit on the first screen, and I'm just going to go down to price. On the drop down, I'm going to work with close, and I'm going to say is greater than. I'm going to select study on this right side. I'm going to search simple, as in simple moving average, and I'm going to change this length to 200 days or 200 periods. I'm going to hit save. So this is saying the closing price is greater than the 200 period simple moving average. So you can read it there. For all of you that are great at ThinkScript, you probably just typed this out, but I just used it with the condition wizard for those that are not so comfy with ThinkScript. So I'm going to click OK on that one. Okay, so that's kind of our first step. Now what we're going to do is we are going to look for a bullish MACD crossover. So that MACD line, that blue line, crossing that signal line, which was that yellowish line, within the last 3 days. So we're going to go add a filter. We're going to go to a study. We're going to scroll down. We're going to go to custom again. Okay, we're going to hit edit. Now on this side, what we're going to do is we're going to select study since we're just working with the MACD. And I'm going to search for MACD, the moving average convergence divergence. And so what I'm going to do is take the plot. Now, to know what the plot is, you're going to have to look at on the charts page. If you go to the edit studies window on your MACD, you'll be able to see the different plots at the bottom of that kind of like edit studies window. And so that's where you can double check this, but I already kind of got this set for you guys, so you don't have to go do that now, but in the future, if you are looking, just double checking the plots of what you want in your scan, you may have to just make note of those on the edit studies window. So that's what I did in this case. So we're going to say the MACD value, because the value is that value of the MACD. That's the MACD line. And we're going to say crosses above, and we're going to select study again. And we're going to type in MACD. And we're, for the plot, instead of value, because that's the MACD line, we are going to use the average. So the average is that 9-period EMA of that MACD line. So this is what the signal line is. That's the average. And so we're going to scroll down and we're going to say within 3 bars. So that's saying this stock had a MACD bullish crossover within the last 3 days. So we're going to hit save. And that means that momentum is accelerating, is igniting to the upside. So we're going to click OK on that one. Okay. Now we're going to make sure that the MACD line is greater than the 0 line. So again, that is telling us that the MACD or momentum has shifted back into a bullish regime, favoring long exposure in this case. So we're going to go to add a filter again. We're going to go back to study. We're going to scroll down and go to custom again. We're going to click edit. So you can notice practice makes perfect. We are walking through the same steps each time. We're going to go here to study. We're going to type in MACD. And we're going to make sure this is set to value. Okay, so again, that is the MACD line. We're going to say value is greater than, we're going to go to study, MACD, and we want to make sure that this value is now set to 0 line. because we're saying the MACD line is greater than the 0 line. We're in a bullish momentum regime. So we're gonna hit save. Okay, we're gonna click OK here. So this should narrow down our universe quite a bit. Now, it's kind of, sometimes people don't have the time to go through a few hundred charts. I know I have the time because that is what I am here to do as my role here at Schwab in the Schwab Center for Financial Research. But maybe you guys don't have the time to go through a few hundred stocks. So if you're looking for more bullish setups, you want to narrow your universe, but hate to break it to you, actually love to break it to you, you're still going to have to go through these charts one by one to identify the patterns. So that's what we're going to do. So we're going to hit scan, and that's going to give us our list. That gives us less than 100 stocks. So that is still a pretty manageable list here. You can filter it down further if you want to add in fundamental criteria or put in an IV percentile. Let's say you want to maybe do a long directional strategy. You could look for a lower IV percentile if you want a higher IV percentile for more of the selling strategies to collect more premium. You could put those in as filters. So just know that you could work with this as a base, but depending on the strategy that you want to, or the volatility regime that you want to trade in, you could add more of those. It's going to narrow down your list even further. So what I'm going to do is I'm going to share this scan query with you guys, and keep in mind that these scripts are not guaranteed for accuracy, timing, or results, but keep in mind this is our kind of bullish type of scan setup here. Now you can always reverse these kind of metrics that we have here and use this for the kind of bearish side as well, but there's that script in there in the chat. Okay. And Paul, you were right. Yep, the scan reduces the number of charts to go through, and we love to reduce the number of charts to go through. I don't, but maybe you do. So we're gonna pick a couple of these out of here, and I have a couple that I want to look at. Let's look at Datadog first. So we're gonna look at Datadog. That appeared on our list. And as we can see, we had a bullish momentum regime. We had a little bit of reignition here. We do have earnings coming up here, so maybe that's something that we want to be aware of. So implied volatility is rather pretty elevated. We do have earnings coming up, but we did have this breakout of an ascending triangle. So what we could do is we could sell a spread maybe right at this level of support, but I think most traders would say, hey, implied volatility is pretty high. We do have earnings coming up within the next day or so, so maybe we want to steer clear of this one. So let's look at a couple others that were on that list. So we're going to go back to the scan, and you know what we could do? If you guys want to narrow this down a little bit more, we could go to add filter. We could go to study, and we could go to corporate actions and say earnings. Now let's just say we don't want any earnings within the next 2 weeks. So the next 14 bars, or I guess, no, 10 days, because that's trading days. So the next 2 weeks, we're gonna hit scan. Okay, and that's going to narrow our universe a lot more here. So 32 stocks in this case. Oh, wait, does not have earnings. Whoopsies, sorry about that, guys. Does not have an earnings announcement anytime in the next 10 days. Okay, let's take a look at another one. We're going to look at Dell here. Okay, so let's take a look at Dell. Dell. Okay. Now, if we look at Dell, meets our momentum criteria clearly. We can see that momentum's kind of reigniting. We just had a break to new all-time highs today. And if you guys can put this in the chat, what technical pattern do you guys see here? So put that in the chat about the technical pattern that you guys see here. And we'll see if you're seeing the same thing that I am. I feel like a lot of times we are, but sometimes someone's eyes may tell them something a little bit different. So I'm going to start drawing this, and you guys are right. We're seeing a bit of a range here. So we're seeing a range that has taken shape over the last 2 months or so. We see someone said a channel breakout, someone said a head and shoulders. Oh, maybe it could have been a head and shoulders, maybe. But we did have a breakout to the upside, so that would have failed. So yeah, so we're seeing a little bit of a range here. Maybe in a long-term chart, this looks like a bull flag, like what you guys are saying. So maybe this is a bull flag that's leading up to this consolidation for another big move higher. But let's just work with this range that we have right here. So we saw the range on the S&P 500 and we talked about how to measure that before. So we're going to look at the entire depth of the pattern from highs to lows. And that's going to give us about a measured move of $105. So since we've now had two closes above resistance, we could use that as confirmation to enter into a long. Or we could use a percentage filter. So if we wanted to say, hey, we want a 3% break of support or of resistance or something like that, we could use that as our measure. So we typically use the 2% rule in this class for a 2% break of resistance here. And so we are going to look and see what that looks like. So I'm going to see where that 2% break of resistance would have been. And that's going to be, that would have been right around 470.58. Okay, 470.58. So we already saw that 2% break. So that would give us confirmation that, hey, this could lead us a lot higher within the next couple months. Now, the reason why we take these measured moves is because the market loves symmetry and tends to respect it. So now this is of course no guarantee. We talked about these measured objectives. Patterns are not guarantees. There's no guarantee that the price is going to get to 567, 568 or so. But because the market tends to respect symmetry in price, so if you see this consolidation over a certain kind of price range, typically the breakout tends to exceed or decrease in the same kind of value. It also like symmetry as far as time. So this was really the start of June when this pattern really started. Now we're getting into the beginning of August. So it took about 2 months for this to break out. So we could say that it could take another 2 months for the price of the stock to reach this point. So right now, the implied volatility percentile isn't really giving us, isn't really being favorable towards us taking a long option strategy, just because you'd be technically overpaying quite a bit on those premiums, because higher implied volatility, higher premiums, and typically when we're option buyers, we want to buy at a lower price. So we could go long the stock here. That could be one of the ways that we could look at this, or we could sell a put as well. And so one way that we could do this is we could say, okay, at the low of this breakout candle, this could be an area where we could sell a put spread. So credit spread there. Collect a little bit extra premium, since a higher volatility environment definitely favors more of option selling in this case. So we're going to go about it that way. We can walk through actually placing a stock trade as well as also placing that options trade. So let's first go with the stock trade. We're going to go to buy custom, and we're going to use this $10,000 OCO bracket. Okay. And so this was a custom one that we built in our other class. And this is saying that, hey, we're going to spend $10,000 on this stock. And the reason why we're spending $10,000 is because we're working with the trade size. We don't want to risk too much. We don't want to risk more than 5% of our account in any one trade. So we're going to change this first order to a market order, because we've been given that confirmation that price is above that 2% move and it has two closes above resistance. And then we're going to say once that fills, we're going to place a profit taking order up at 568. So we're going to say at 568. And we are going to place our stop down where that gap really takes shape. So we're going to place our stop Let's actually place our stop if the gap gets filled. So I'm going to zoom into this a little bit more so you guys can see this. Because price may come under this level here. So price may kind of dip back below and close a portion of this gap, which wouldn't be too bullish of a sign. But what we're going to do is we're going to say if that gap gets entirely filled, that would become an exhaustion gap in that case, that's where we want to get out of this trade. So we're going to place our stop and we're going to place that right around 433. Okay. So that gives us about $40 to the downside. Now, feel free, if you want a more favorable risk to return, tighten up that stop a little bit. Certainly do that. If you feel more comfortable putting it at 443, you can definitely do that to make it a little bit tighter. But keep in mind that our upside, we're going to kind of move to our upside. Our upside's going to give us almost another 100 points from here. So we still do have a pretty favorable risk to reward in this case. And of course, we're going to move up our stop as we go, but that's going to be what our stock order looks like, okay? Now, for those of you that are new to this class, or maybe you have a technical pattern where you haven't seen that confirmation yet on the entry, maybe you would use a buy stop order to say, hey, wait until the market hits this price, then send a limit order, then send a market order. And of course, keep in mind that there are risks with those as well, because there's no guarantee that the price of the stock's gonna fill at or near your stop price. So we're gonna use this one today. We're gonna hit confirm and send. We're gonna send this to our price patterns class, hit send. Okay. So that is our stock trade for those of you that are stock traders. Now, those of you that are options traders, let's take a look at that 443 level that we just saw. And maybe we're going to use that or even that 432 as a level to sell a put spread against. So short put spread, bull put spread. So we're going to go to the trade tab. And with selling strategies, we know that time is going to decay the closer and closer we get to expiration. So with that, we're going to look for a shorter time frame. So maybe 30 days, maybe 20 days out. Let's look at the 20 days out and let's take a look at that one first. Okay, we're going to collapse our left sidebar here so we can take a look at the options chains. So we were looking right around that 445 or so. That was kind of one of the levels. 435 would have been where that other level was. So we're going to look at our deltas, and a trader may say, hey, I may be safe with selling this 445, buying the 435. Because if you look at our delta, this is telling us one of two things. This is telling us that per dollar move in the stock, this is how much our option is going to move. So remember, puts move inversely from the stock. So that's why you're seeing that negative delta here. So a $1 move up, you're going to see a 30-cent move down roughly on that option. Now, it also tells you your probability of that option expiring in the money. And so when we're selling options, we want that probability to be higher, we want that probability to be lower of expiring in the money. So I'm going to build this trade. I'm just going to click the control key on my keyboard. I'm going to look at buying the 435 and minimize that. And we are going to sell the 445. Oops. I didn't click the control key. There we go. Okay, so we can see pretty tight spreads on each of these. That's the first thing you want to look at, is the tight spreads. The liquidity is there. Now, if we're kind of looking here, we can see that we have a 350 credit or so. Okay, so the most we can make is about $350. The most we can lose is the difference between those strikes, so $10 minus the 350. So the most we can lose on this trade is going to be about 650. Okay. And I do have a question. Couldn't you buy a leap instead of the stock instead for less money? Yes, you could, but we talked about how high implied volatility is. You would be overpaying for the leap right now. So when you're buying options, you definitely want to take into consideration the levels of implied volatility, and you probably be looking for a lot lower levels of implied volatility so you're not overpaying for those options. So that's why we just started a smaller position. If volatility was a different environment, that could have been a trade. So let's take a look and analyze this trade. So I'm going to right click on this order and I'm going to analyze our trade here on this one. Okay, so we're going to go to the Analyze tab. It's going to take us to the risk profile graph. And so I'm going to uncheck our stock because what we're looking at is just the options right now. Okay, we're going to look at the risk that we just talked about on this. So the first thing that I'm going to do is set this to the day after expiration, which it is set to. And the next thing I'm going to do is set our slices to break even on expiration. Okay. So one way of looking at probabilities was looking at our delta, right? But another thing that we could do is we could set our slice right on our break even on expiration and look at these probabilities up here. There is a 60% chance that we're going to take a profit on this trade. Okay, so if you wanted a little bit stronger of a probability, we could take these strikes a little further out of the money. Now, you may be collecting a little bit less premium, but the risk may be less in that case, and your kind of probabilities of keeping that premium could be higher just because of how inflated implied volatility is right now. So one standard deviation move from where the price of the stock is now over the next month or so could take the stock up to 595 or all the way down to 370 or so. So maybe we want probabilities on our side. Let's see where these could take us. So let's move it down to the 425. We're going to see the difference there. And we're going to move this down to the 435. Okay. And that's a little less premium, right? So that's a little less premium, just a little less. But if we take the set slices to break even, we get a little bit more probability on our side. So we could definitely do that. And if you guys kind of notice here, this blue line again is going to be our profit and loss and our risk on expiration. The purple line is our risk today. Okay. So if we kind of move our cursor along these lines, you can see how it's going to show us our theoretical profit and loss by expiration if it goes to a certain price. So that's just a visual way of looking at this from what we talked through on the order screen. So it makes a little bit of a difference in probabilities, makes a little bit of a difference in price, but we can go with our original one here. I just wanted to show you guys a couple different trades, a couple different ways to look at it if you wanted to squeeze a little bit higher probability out of it. So we're going to try to go for the midpoint here. This is still staying within the risk parameters of our account because we're only risking $650. So we're going to hit confirm and send, and we're going to send this to our price patterns class, and we're going to hit send. Okay. And we got a fill. Awesome. Okay. So as long as the price of the stock stays above 445 by expiration, we are collecting that entire premium, which was $367. Okay. So, awesome. So what we are going to look at now, so we went through two different scenarios, one for options, one for stock. And so we don't have time to go through any of the others, but when you guys looked at that scan, you could definitely see there are quite a bit of other stocks to look through. And so what I would suggest is looking at some of these stocks on different time frames. So I'll show you what I do for my process, and we'll kind of walk through the same thing. So let's take a look at another one here. So this one isn't on the list, but I want to just show you guys a couple other price patterns to take a look at. So this is kind of what I do when I narrow down a list. Trader may do this as well when they narrow down a list of stocks. So let's just say I put my scan results on this left sidebar. If I put my results on this left sidebar, what I could do is build a chart grid that may give me a few different time frames. So I may want to first look at the max monthly chart to take a look at the primary trend. If we are in a primary uptrend on the max monthly or max weekly, that could give us an idea of how the context of that shorter term trend, the more tactical trend that we're going to use for trading opportunities, to see if that confirms with it. Because as traders, when we're looking for confirmation, we want to look for an alignment across time frames. So for this example with like NVIDIA, for example, we can see by looking at these two bottom charts that this is telling us that we are in a primary uptrend for NVIDIA. And if you look at the short term, we have a bottom reversal here, a breakout. If you look even shorter, we had that range breakout. So we're getting that alignment across time frames here. So what I suggest you do is just kind of go down your list, take a look at the longer term time frames, take a look at the shorter term time frames. You can see this one doesn't really align, like with Google. We just got rejected at a level of resistance right here. This could have been maybe could be forming a cup and handle pattern, especially if it forms a level of support right here. If we see this turn back up, that could be our green light to get long, or maybe buy call option with a favorable implied volatility environment to give us that run to the upside. Let's look at a couple other ones that I had on my list. Home Depot is actually one that kind of came up onto my list here. It shows that we're in a primary uptrend, but we may be seeing a little bit of a bottom reversal here. So if I zoom in to this yearly, we can see momentum reignited here just recently, and we can see that price is approaching a level of resistance. And so what do we have leading into this pattern? We have a downtrend. So we have lower highs, lower lows. But now we're starting to see a little bit higher highs and a little bit higher lows. So that is telling us that we are seeing a possible bullish reversal, and that will confirm right above that resistance break. And so this is what we call that inverse head and shoulders pattern. It is textbook, but we don't want to use technical analysis to anticipate a breakout. We're not going to buy this stock now. We're not going to trade this stock now, at least on this time frame, because we haven't seen that confirmation yet. So maybe next week will give us that confirmation of a break beyond that level of resistance. But if we take that measured move of the depth of that pattern, you guys love when the math works out. Well, look at that. Right at that level of old resistance is where that measured move is. So that may be an opportunity for next week, you guys. Another one that we can look at is Sherwin-Williams. We actually did get a breakout of this one. So 2 closes above resistance. We've already seen that move beyond. So that could give us one more trade that we could take. Implied volatility is relatively low. So we could get long with a long call option. This pattern took about 4-5 months to complete, actually. So we could look a little longer than 5 months on that option strategy there. Or we could get long the stock, and we could use old resistance, now new support as that stop. We could use that profit target up here as our level of resistance. So we don't have enough time to place that trade, but this is what that trade would look like. Whoops. That stop is going to be right around where that gap above resistance occurred. So that could be the stop to the downside. So that's about, let's see, that is about $11 of risk for quite a bit of return. So that is a favorable risk to reward for a trader in that scenario. So we wanted to always leave you with a couple different patterns to look at. I'm sure you guys will find more by looking through those individual charts on various time frames. So remember that that is part of the process, is doing the work, looking at a time frame that matches your time horizon and strategy. Now, remember, we do have that survey in the chat, so please feel free, give your feedback in that. I'd love to read all of your guys' responses. Please like this video as well if you found it useful. It will help other traders find this information too. And I do have a question, I think, about, is this a regular session? Yes, it is. Every Wednesday at 1 p.m. Eastern time on our Trader Talks channel. This is where you will find this webcast. So just go to Trader Talks Schwab Coaching on YouTube, the channel that you're on now, and hit subscribe, because you can be alerted when this class hits the bell Wednesdays at 1 p.m. So we'll review these trades in coming weeks, and we'll place new trades. We typically have a twist of a different topic every time, but we're always trading these price patterns. So thank you again, you guys, for all of your questions in the chat. Thank you, Mike Fairborn. Please feel free to give him a follow on X. He is Mike Fairborn CS. I'm Rachel CS. Please again subscribe to us on Trader Talk Schwab Coaching, and have a great day. See you later, traders.